This is just on Monday, December 12th, 2022, looking at SPY and the daily here. So we got another little bit of a bounce today. Actually took out the high of the last few days. What's really interesting, I'm gonna zoom in a little bit more, is it's kind of like a tweezer-ish sort of bottom, which we put in at almost the same lows uh, earlier in December, or actually right at the end of November. So it kind of bounced the same place. And then a few days ago, we were bouncing off the 100. We were bouncing a little higher than that today. There's a lot of support in this area. Yes, even these lower wicks, all of this is support coming in. Actually, this day we didn't get much of a lower wick. Let's go look at the 3-minute intraday here. So with the bounces that we got off of the 100, which were around here, we put in kind of this bigger S curve here. My mouse just bumped something, so let me try that again. All right, so nope, mouse bumped it again. One more time. There we go, like that. Just kind of smooth it out. It's kind of an S curve. So when we were running into this resistance again, one of these days, I'm going to draw a really good straight line. All right, so this was Thursday, Friday. Bulls were trying to get this going, breaking out, didn't work, and instead pushed back down where the support in here gave out. And so we broke down into the close. We actually came down in here, retested this gap again, and then today, so fast forward through the weekend, here we are today, Friday, we actually gapped up and opened a little bit higher, but right at this kind of same old support, new resistance. And it was initially, we were at this resistance today. And so then you get this compression happening. So now we can just look at today, because yesterday didn't, or Friday didn't really matter so much once that came in. So it starts out an inside gap, and I'm going to redraw that kind of compression here. You can see what's going on. It's just getting a lot of relative highs and higher lows. And then you start to push up and you get an S curve. It's also a double top, yes. But we actually hold what level we were running into earlier on. And so this old resistance, morning resistance for the first hour and a half of the day, becomes new support. And so anytime you can bounce off of this, even here, is a good place to be buying. We're only slightly going higher, but all the while we're just really building this compression, and we're doing that right inside of, now I gotta zip back out, inside of the range that we were in this area. Oops, didn't mean to do that. Let me focus this in. Okay, so this area from Friday is where we're right back battling. It's a battle zone. So all through here we're battling. And we ultimately broke down on Friday. And today, after that breakdown, you got some bears thinking they'll push it lower. They get trapped, it pushes higher. And so that turned into a bigger breakout today because more bears were trapped. So anyone who had their stop right above there got a little wick out, and then we were getting pushed back down again here. And then above this, we were just gone. So that bull candle came in and we were just running. And then we came right back up to the highs from Thursday and Friday. And we got a little bit of a selling because people were taking profits. Good place to take profits because some more bears are going to come in and push this lower. Well, they didn't come in and push it down enough, because we actually ended up, all of this at the end of the day, last hour of the day, was then trapping all of the bears from Thursday and Friday. So where we're at now is we have the potential to continue to break out. I'm going to do one more thing. I'm going to zoom out on this and look ahead a little bit, and let me see if I can draw in. You know what? Let me go back and get the daily. Do I still have deleted a lot of lines in here? I'm trying to even find one of them. Oh no, my lines were on SPX, not on SPY. All right, but what I wanted to draw, I guess I'll just do that here, is, can I do it with this? Let me see if I can do it with this. Can I rotate this? Nope. Can't rotate that. Okay, we're just gonna draw slipping line like that and a slipping line like that. So this is kind of our new channel, or it could be a bit of a flag. It just depends on what you're really looking at as the levels. So we're just bouncing back and forth between the low of the channel and the high of the channel, and we're back up the high of the channel. So we could have another choppy day up here. We could come all the way back down and turn this into kind of like an inverted head and shoulders, you know, with a bigger retest and then a breakout. The 100 is not far above. I'm sorry, the 200 is not far above, so we could run back up into that. But we've rested for a while. So this could be a bit of Santa Claus, really. This was a really nice inverted hammer. These 4 candles here look like they're doing some sort of like a rest where, you know, the next direction should be a breakdown bearish. Looks like more of a stair step, and now it looks like we're reversing, going higher. Today's high and close are the same, so it's a shaved top. So we should see some more buying. We should see a gap up in the morning. If not, that means people who are buying right up into the last second of the day to get orders in, if we gap down, they'll be trapped. So we'll see what's going to happen with that. Let's go back to the 3-minute here, and we can see that we had some opportunities to play the 10 EMA. If you don't know what that means, go click the link in the description and sign up for a free account. Learn lots of free things before you put any money into it. But 10 EMA strategy is something I've been talking about a lot in here. So we started to have this kind of rally here, putting a bear candle, last one here, right at the same level this upper wick was, right about the same pivot. And if you kind of take a step back from what I was drawing in earlier, where you have this sort of compression here, you have that kind of repeated here like this. So it's kind of fractal. It's not the same, like it's still this, but it's kind of playing out a little differently. But it's still that relative high and higher lows, and that's the last bear candle before we start to actually get the breakout. And so this would be a setup, getting in bullish above that candle, and a stop down here or down here or something like that, somewhere below the 10. So if we go and look for this on an option, let's go look at the 395 call that expired today. Here's that same candle. So it was actually a flat open close candle. Opened and closed right at 129, put in a high of 140. So let's say comfortably 145, maybe 150, just to get above even this. Didn't quite get above this one, but let's just go with buying at 150, and just for easy numbers, a stop down at 1. And with $100 risk, you buy 2 of those contracts and look for a move up to probably 210, something like that would be really nice. And this first candle that, not the first candle, but well, let's see. Yeah, actually you're triggered in on this candle and you nearly hit your target on that candle. So if you have the wherewithal and you're watching the trade get filled, and I mean, you should be, because you got about an hour, a little more than an hour left in the day. So these are ones that you want to keep an eye on. It turns in a little bit of a stair step here, maybe kind of a flag. The flag is usually aimed down, but I would move my target up some when this happens, and bumping it all the way up to 250 would be comfortable. You got some momentum behind you because it moves so quickly. You can get your stop moved up to pretty much break even, maybe just a little bit below this candle, maybe not break even yet. Let's say even 130 would be comfortable there. So even if it comes all the way back down and retest this, you'll lose way less than an hour, but that's a good place to move the stop. If we look at the put, this is the, let's look at, no, this is a good put to look at. So we have here, there's a bull candle that we're breaking down at the same time. the whole day we were getting the same kind of compression, just everything flipped. So we're getting lower highs, relative lows. And then again, here we were getting some lower highs, kind of relative lows here. So it's all just flipped from what we're looking at on the call side. As this moves up, we do continue to push higher. Let's see, we only get 4 bull candles in a row at any instance. So one of the rules that 10MA is to just get out on 5 bull candles in a row. Didn't get that. So you could have just either just taken your profit at 1.2R or try to bump this up and trail a stop. There's some other things you can do to modify that for options or however you're going to go back through and figure out what works. But you know, the simplest way is just get out at 1.2R, which would have been that 210 price, and that would have filled a nice target pretty soon after. So let's see, it would have been filled and out in and out of the trade in 5 candles. That's a good day. That's a good trade. That's all you need to do. Just do that, you know, a couple times a week. And yeah, so let's go look at, do we have something similar happen on SPX? And what could we have traded on SPX? So zoom back in here. We don't get that same bear candle. Okay, so we don't actually get a good setup to way up here. So it looks like today SPY was the better way to go because that candle did not turn green. Would not have gotten the 10-UA setup. All you could have gotten is some pullbacks. Things looked very similar. Yeah, just grinded all day sideways through here. So this was the time to be in. I was in something bullish later over here on SPY. But yeah, just didn't get that signal early enough. So you had a bunch of bull candles in a row and then one bear candle right here. It's like, that's not enough of a pullback. But then 4, yeah. So now, yeah, just didn't get enough of a pullback on the SPX or even just a rest on the SPX. Nothing that would have triggered the 10-MA setup. So now, if you had taken this candle because it played out on SPX, I'm sorry, it played out on SPY, but not SPX, that would have been at the 145 time. So let's go look at, let's move this out to SPX. There we go. So what was this doing late in the day? Because this is the kind of potential I like to look at. So at 145, this was candle here. The low was 0.57, the high was 0.75. So you could have spent $1 or less, absolute zero, and by the end of the day, it would have been much, much higher. Even, you know, getting in, you could even bought on this same candle that filled on SPY would have actually filled or should have filled at $1 here. Also moved too quickly and got skipped. This has more of a stair step look to it with these 3 candles continuing on up. This is one where if I'm in this option, I would be bumping up my stop. Bumping up my target numerous times. If I'm just looking to maybe get in at 1 and get out at 2, I don't know that it would have been quick enough. If I was getting in at 1 and had a target of like 5, I mean, sometimes it's easier on these just to set a target and then see what you need to do to react to that target. So it moved up to here quickly to 3 and then starts breaking out to 4. I'd be moving my target out even further. So from 5 up to 9, probably just to get in or just to get a target of double. Wouldn't have filled here, would have felt like I'm an idiot, would have gotten my stop up here to about 2. This is all like if I had gotten in at 1 way back down here, or even a little bit less than that. And then as it's moving up here to 9, it's like, okay, let me see if I can get that target of 9 and I'd be out, but then I would still miss out on all of that. But I'd come away with an 8-hour trade and I'd be happy with that. So it's good to look at the different things that SPX and SPY can do, how they move, but to make make plans for how you would trade each one of them if there's differences And I think that's something that I need to do more of on here, is just point out the things I'm seeing as being different. So obviously this candle is different here on SPX than the red candle that we got on SPY. And we don't get the same trade setup because of those. So maybe there's other things that we can look for that are a confluence between the tickers, but when they're not, then go with the ticker that has the setup. Or if you can find that they are very closely resembling each other, maybe just not getting the same candle, and you have them both up on your screen, then if SPY is setting up, get ready to take the trade with SPX. And what I've found is SPX can have a bigger move on options that are out of the money, but you are risking more, or not necessarily risking more. You can still do it with the same absolute zero. I think you're risking a higher, what am I trying to say? You're risking that you're going to have fewer wins because it has to travel further to get in the money or get to at the money, or be approaching at the money. Whereas you can get into something that's already at the money or in the money on SPY in order to do the $100 risk, absolute zero sort of format. So that's something a little different. I'll have to dive into that more, kind of what I'm thinking, and compare between SPY and SPX. But we'll see if we can get a move that continues to move up. Let's see, we actually got a little bit of a bounce off of the 100 on Friday. The low here was 39.3304, and we're at 39.3017 on the 100. So a little bit above it. I think you're still getting a lot. Yeah, there's still, I'm going to try and zoom in on this. This whole area here is a really good support zone. We've been bouncing off of that for a few weeks, and we've not closed below it. Although Friday's close looked like it was heading that direction, and then today's candle changed everything, and we're going up again. So the next things we have to contend with are the high from this day, going back to the 6th, and then the 100, and, I'm sorry, the 200, and some lines up above that. We just sank through this from the 200 down to the 100 in 2 days. We could easily rally back up into it, into tomorrow or the next day, and just have some bullishness come in. But we've just been sitting in here compressing, and so it kind of makes sense that we're going to continue to bounce around in here a little bit longer. If we do end up breaking out, I think that'll turn into the Santa Claus rally and last a little bit longer into December, and then we'll see if we can kind of end the year on that much of a high note. I mean, we've been down all year, so I don't anticipate us recovering from, basically the high of the year was the second trading day of the year. So there's no way we're getting up there. But could we be contending with maybe 4,200 by the end of the month, by the end of the year? We could be back up there. It really depends on, can we get above the 200 and trap some more bears. If we can do that into this week, I think we could have another S curve down and then push back up by the end of the year. I think that'd be possible. But let's just take it one day at a time and see how much resistance comes in now that we pushed through it once. It was the first time we actually pushed through the 200 since back in March. So we pushed through it once, not as much as we did back in March, but it's really a question of, can we push through the 200 through here? And if we do, how much further can we go? Or the bear is going to come in and really sink that down like they did through this day. And this is the candle range that we're talking about. I'm not zoomed in on this. Let me zoom in on this. This is our resistance zone. It's all of that selling from that day. That's the resistance we'd be facing into the end of the year. If we can push into that, it's going to just be a chop into the end of the year, but there will be bullish days running up into that, but definitely not a guarantee that we'll even get up there. So we'll see what happens. Hope this helps. This is Justin. Thanks.